Hi everybody, Alex Deploy here from Expert Forex, and in this video I'm going to explain how the profit recovery strategy works and why you in particular should be using it. Okay, so let's look at the why you should pay attention to this life-changing video, and it has changed my life, and I'm hoping that you will see the light too. Now, this is the why you should be paying attention to this video. This concept has been tested for a very long time using lots of robots, and here are the details. We've got 102 robots running profitably using this strategy. So there are 102 links, and this is an extract from our Link to Success service, where you can link to any of these 102 accounts with your own account and experience the same results. So not only does this service provide that particular opportunity, but it also proves that the strategy is a good and sound one and makes a lot of money. So let's have a look at how much money it makes. So let's carry on with this. The average age of the 102 accounts is 255 days. So on average, 255 days is the age of an account. So this service is a well-established one, and we'll look at some of the older accounts soon. The average gain over that 255 days is 95%. So over a year, it will be well over 100%. The success rate, and you can just cast your eye down the success rate, is 66%, which is a constant with this strategy. That is the success rate that it produces, and you'll see over and over again 66% is what it produces. But the most important thing for you is it produces 15% return on capital. So fantastic results, and that is the why you should be paying attention to this particular video. These are averages. Remember, these are averages of the 200. So there are ones that are producing way more, like for instance that one, 77% on a monthly basis. So these are averages, and therefore you can actually produce the most amazing results with this. So let's carry on with so let's look at some of the older accounts, and here you can see some of the older accounts. Some have been going for 573 days. They've produced that return, which is a return of 8% a month. Now, I'm telling you, you need to ask yourself, are you making 15% return in your sleep at the moment? And are you doubling your accounts on an annual basis? You have to ask yourself. And again, this is the why you should be watching this video, because I'm going to show you how this strategy works. Okay, so straight into it. How does the profit retrieval process work? So it's a very simple process. What it does is, if you are in a losing trade, rather than using a stop loss, add to your position. In other words, create another trade. That is the whole system. Very simple. I'm going to analyze the system in a little bit more detail, but that is the philosophy. You trade without stop losses. So let's have a look at a very simple example, and I'm going to go through this sort of step by step. So you would open a trade. Let's say you're opening a buy trade and you're using one lot, and the price at that time is 1. So what happens often in Forex trading, the price doesn't go in the direction that you intended, and it goes down and reaches a particular level, and this particular level is when the price is 0.9, and this is just an example. So you would open a second trade. You would buy using one lot. So you use one lot there, you use one lot there. So what does that create? Firstly, it averages the cost of your trades. In other words, the average cost of your trade is now 0.95. And what that also means is that if the market retraces to that level, 0.95, you will break even. And why would you break even? Because trade 1 would have a loss of 0.05, trade 2 would have a gain of 0.5, and you are breaking even. And important here is that the retracement required to reach that level is 50%. So that in a nutshell is how the profit retrieval process works. It uses top-up trades instead of stop losses. Now, many of you will be saying, oh, but what if it goes even further? Let's go, say it goes to a 0.08 or 0.07. What happens then? Now, I must remind you that this system works. So if you are going to be distracted by those kind of thoughts, don't even watch the rest of the video, because it will make no impact on you. You have to keep an open mind and remind yourself that this system works and produces the most amazing results. Because traders have a lot of baggage, they will not accept the fact that you are trading without a stop. Okay, and just a reminder again, look at those results, look at those fantastic returns that are being generated by this particular system. You can see the monthly returns, fantastic returns, 66% success rate constantly throughout the process. Okay, so let's have a look at this simple example in a little bit more detail, because it is not that simple. That is the introduction example to make you understand what is going on. But there are lots of variables that we can use. Firstly, the lot size for the second trade can change. So instead of using one lot, you could use less. You could use 0.8 lots, or you could use more. You could use 2 lots, for instance, and that is almost a martingale type of system. And then the next one is the distance of the top-up trade, and it's basically the distance between the first trade and the second trade. That is a variable to you, whether you use 50 pips or 100 pips or 200 pips. That is also a variable that you can apply to your strategy. So you can use different lot sizing for topping up, and you can use different gap sizes, we call them, for your top-ups. And then thirdly, you can decide on your cash-in level. Sometimes traders don't want to break even. Maybe they want to make a small profit, so you can push that line up a little bit so that this trade makes a bigger profit and that one makes a smaller loss, and you come out of the trade in profit. And that is exactly what the profit retrieval process is. You just push it that little bit more and you end your negative experience in the market with a positive gain. So one of the EAs that we have is called the profit retriever, and using the profit retrieval process, there's the link that you can go to, and what it says, it makes profits no matter which way the price moves. So if we look at this, if the price had gone up, you would have cashed in positively. So you're positive. If the price goes down, you still cash in with a small gain. So it doesn't matter which way the price moves. And as we've seen, this technique has a 66% success rate on a constant basis throughout this 102 accounts that are being traded. So mathematically, the success rates are consistent, and therefore the success of the system is consistent. Now, just to look at the profit retrieval in a little bit more detail, to relate it back to what I've just told you, there's the gap size that is in the settings, and in this case the setting is for 36 pips. You can basically set that at any particular level. Then there's the initial trade size, which is 0.2 in this case. So again, the robot will run off that particular one, and then you can tell it how much you want to increase or decrease that one. So you can increase it or decrease that. And how you do that, you use this rate, which is a percentage. You say, I want to increase it by 120% every time it travels by the grid size in a negative direction. Or you could tell it, I want to decrease it by 80%. So it will take that number and times 80%, and that will be your lot size for the next transaction. So if you want to keep it the same, you just put in 100 and it will keep it the same. So now you're starting to see this in practice, this theory. And then the next one is your closure amount. There we are. In this particular case, the robot is being told only close once a profit of $10 has been made on all the basket of open trades that have gone into the profit retrieval process. So there you are. You can see it in practice. That's how the profit retriever basically works. And then just a reminder again how successful this particular strategy is. And there we are. These are all the profit retriever results. And you can see the monthly returns are fantastic, really good returns. And the average age is very high. This particular EA has been traded for a very long time. We're looking at 155 days in some cases, and so on. So it's what you're looking at here are established trading records, and you can see the fantastic returns that have been generated by the profit retriever using the profit retriever process, which I'm actually explaining right now. So let's just expand on that simple example and say, all right, let's say the price now jumps, and it jumps to the third gap level. So these are the gap levels that we saw in the settings, and therefore you opened one when it hit the first gap level, and then you open another buy at the second level, and we're still sticking with one lot in each case just to keep this example simple. And what it basically is saying is that if the price then retraces by 50%, there's 100%, that's 50%, you will break even at that particular price. And here are the calculations. Trade 1 will make a loss of 0.1, trade 2 will break even because it's back to where it entered, and break 3 will have a gain of 0.1. I'm ignoring spreads and overnight costs to keep this example simple. I am educating you, and I'm using simple examples. The retracement level, however, has stayed constant. So really, if you use these kind of lot sizing and constant gap sizing, your retracement level will stay constant. Very important part of this little exercise. So let's start playing around a bit and say, all right, so here's trade 1, it's used one lot, it's at that price, it's the same initial example that I used, but now instead of one lot, we're actually going to use 2 lots. So again, that is close to the martingale principle, not necessarily a bad one, but I'm not promoting the martingale principle at all. I'm doing this for educational purpose. I want to show you that if you use 2 lots, your retracement level decreases dramatically. And here you can see that the break-even price has now dropped from 9.5 to 9.33, and you can get out there. And here's the calculation. Your loss on the first one, because you're using one lot, is 0.066, and your gain on the second purchase, because you're using 2 lots, is basically 0.33 times 2, which is 0.066, and there you have broken even. In this case, the retracement required was only 33%. So that's why some traders use high lots, because the retracement can be much smaller. If you were using similar lots, you'd require a retracement of 50%. Again, I'm not promoting this particular approach. I just want to give you a feel of the numbers that are involved. So if we then plot this on a very, very simple chart, and we say, okay, there are the factors that we're going to be using. The lot factor will remain the same. The lot factor will increase by 20% or 40% or 60% or 80%, or it will reach 2, which we've just looked at right now. It means that the retracement required to break even will drop dramatically the higher your lot size increase is. And remember, we've seen that in the settings. In fact, let me go back to those settings, and here you can see the settings. So you would have started there. If you want to go for a factor of 2, you would actually put 200 in there. So it would increase that. It would double that number to 0.4. Okay, and then recently, about 7 weeks ago, we introduced the Liberator range. They use exactly the same profit retrieval process, and you have seen some of the results of these particular EAs. In fact, let's go and have a look at those results again. And here they are. And in fact, when you read Crusher, you can actually read the W Liberator, because that was the earlier version of the W Liberator. We had a name change. And there we are, 105% in only 44 days, over 100% in 44 days, and so on and so on. So these particular ones are actually slightly better and are producing better results. There you can see the monthly average gains, again 77%, 70% there, and so on. So these new EAs have incorporated these the profit retrieval concepts in a very, very good way, but at the same time the success rates have remained pretty constant. Now, I hope I've given you an understanding of how the profit recovery strategy works and why you should use it. I will in future videos expand on this particular strategy, because you can't just use it blindly as I've shown you now. You need the right account size and account type. You also need to have a lot sizing strategy that reduces risk. You need to have a grid size strategy that reduces risk. And while I'm talking about, let's just show you the basics of that. Okay, so here we are at the variable. So the lot size, in general, and I'm talking about in general, the more you increase the lot size, the higher the risk. As simple as that. If you can actually even decrease the lot size to lower risk, but the higher you go, the higher the risk. Then the distance to the top up, again, the bigger the distance, the lower the risk. The smaller the distance, the higher the risk. So that's how we manage risk. And then the cash in level, the higher you make your cash in level, in other words, if you want to make lots of profits, the more difficult it is for the price to retrace to that level, so you're increasing your risk. As simple as that. That is how the risk is managed, and it's a very delicate balance between the gap size, the lot management size, and the cash in levels. We have almost 2 years experience in those areas, so we have narrowed down the settings down to a very small bunch of alternatives. Now, as always, the links to all the items mentioned in this video, the linking service, the profit retriever, the wave Liberator, and the RSI Liberator, will be in the description of this video, as well as in the first commentary of the video. I thoroughly recommend that you join the linking service and link to as many accounts as you can to experience the power of this profit retriever strategy. And you can do that on demo accounts. So you can do that for a month or so, and once you're totally convinced, you can then start using live accounts. But as you can see, the results are pretty steady, the success rates are pretty constant, and it's a case of you just plugging into the system. Or the alternative is to purchase one of these robots and do some self-trading on your own accounts. So from me, Alex Aploy, cheerio.